and welcome to Business Incorporated. I am Bolaji Akiwale. Thank you for joining us. Now, this week on the program, we will be taking a look at the monetary policy decision of the Central Bank of Nigeria. The benchmark index was retained at 12% alongside other decisions. Our guest is Dr. TERIBA. He is an economist. But before we bring you our conversation with Dr. TERIBA, let's check out some of the headlines during the week. The federal government has revealed that the total gross revenue from the local production of rice in the past 3 years is 750 billion naira. Farmers and small-scale rice processors in the country made a net income of 407 billion naira as a result of the ongoing transformation in the rice subsector. The Minister of Agriculture and Rural Development, Dr. Akinwumi Adesina, noted that with a new drive in rice production and the amount of arable land to cultivate the crop in the country, Nigeria had the capacity to produce sufficient rice for its populace. He said rice could be grown in all the states in the country except one. The minister said the government had increased the area of cultivation of rice by 1.9 million hectares, adding that farmers in Nigeria were getting 5 to 6 tons per hectare yield with a new variety of the produce introduced recently. He said the recently introduced rice policy, which raised tariff on imported rice, was done to give Nigerian farmers a fighting chance to increase their production. Nigeria has the potential to emerge as a global economic force, powered by a booming consumer market valued at $1.4 trillion by 2030. This is according to McKinsey Global Institute, a consulting firm, in a new report released during the week. Projected growth rates of roughly 7.1% per year through 2030 would raise total GDP to more than $1.6 trillion, making Nigeria a top 20 global economy with a larger economy than the Netherlands, Thailand, and Malaysia in 2030. There is a large consumer class developing in Nigeria, with potentially as many as 160 million members, more than the current populations of France and Germany combined. Based on an expanding consumer class in Nigeria, consumption could more than triple, rising from $388 billion a year to $1.4 trillion a year in 2030, an annual increase of about 8%. This would make trade the largest sector of the economy and provide a good opportunity for makers of packaged foods and fast-moving consumer items such as juices, which could grow by more than 10% per year. Multinationals and conglomerates operating in the country are undertaking vigorous expansion projects while building capacity to have a fair share in the potential market. And finally, in the headlines, the federal government has restated its commitment to facilitating the growth and development of domestic trade across the country. The Minister of Industry, Trade and Investment, Mr. Olusegun Aganga, gave the assurance during a town hall meeting with traders in the southwest geopolitical area in Lagos. The meeting was attended by traders and representatives of market associations from Lagos, Ogun, Oyo, Osun, Ondo, and Ekiti State, as well as representatives of the Nigeria Customs Service, Nigerian Immigration Service, and the police. Mr. Aganga explained that the meeting was necessitated by the federal government's recognition of the importance of domestic trade in achieving inclusive and sustainable economic growth and development in line with President Goodluck Jonathan's transformation agenda.
Wherever and whatever your banking needs, Guarantee Trust Bank will be there, now and into the future. Because you're at the heart of everything we do. Guarantee Trust Bank, proudly African, truly international.
The committee noted that the policy direction of inflation, exchange rate, and interest rate must be seen not only in the context of price and financial stability, but also in enhancing the quality of life of Nigerians and promoting employment generation. The committee's decision. In view of this development, committee decided by a unanimous vote to retain the current stance of monetary policy, with one member voting for an asymmetric corridor around the MPR. Consequently, the Monetary Policy Committee voted to 1. Retain the monetary policy rate at 12% with a corridor of plus or minus 200 basis points around the midpoint. 2. Retain the liquidity ratio at 30%. 3. Retain the public sector cash reserve requirement at 75%. And 4. Retain the private sector cash reserve requirement at 15%.
As predicted by analysts, the MPC did not shift ground on the key rates. Let's listen to Dr. TERIBA in this discussion. Now, the Monetary Policy Committee of the Central Bank left its interest rate unchanged at 12%. Now, where you heard about this, or if you're ready to communicate, what were you thinking about?
Well, it was largely expected that they would leave all the policy levers unchanged because key macroeconomic variables have been stable over the past month. As a matter of fact, they've done better than be stable. Key variables have improved. The external reserves has risen by like $3 billion over the past 3 weeks. The exchange rate had remained stable. The stock market capitalization has reached a new peak above 14 trillion naira. The pre-crisis peak was just 12.5 trillion naira. 14 trillion is definitely a new historical peak for Nigeria. So the indicators are encouraging. Inflation remains low. You have gains of 0.1, 0.2, which in itself, doesn't reflect any build-up of inflationary pressures, because you have to. Not all inflation developments are worrying. Some are transitory. You only have to be concerned about the permanent component. So the environment is stable, and there is no reason why the MPC would want to rock the boat.
Okay, now events in the global markets were considered during this meeting. And one of these was the tapering of the quantitative easing of the U.S. Federal Reserve. In your view, how do you think it may have impacted on the decision of the committee?
Well, the tapering is becoming less and less of a news in that they had started reducing from 85 billion